Good morning, everybody. Well, at least it's good morning while I'm recording. It's January 14th. Seems almost old hat to say Happy New Year, so I'll say belated Happy New Year. In the markets, the continued softness goes down, and specifically now that they are more down since the start of the year. On the heels of my last communication, which was on rebalancing, which is one of the weapons that we employ always, but it becomes most effective in down markets. And that was the last video that was right at the beginning of the month. If you have not seen that, my strongest encouragement is to go to my website, timothyjoconnor.com, watch it. If you would just like the link sent to you again, just call the office. We'd be happy to send it to you. This video I'm going to reference something else that becomes yet another weapon in combating these down markets. And I have some specific information from Kenny Gatliff, who's a portfolio manager for Matson Money. The reason you're receiving this video, and this video is not being received by everybody, only investors in the Matson Money portfolios are receiving this, so that's why you're receiving this video. What Kenny got to me was the year-end reinvestment of dividends and capital gains that were credited to the portfolios. And some of what happened was pretty striking. The percentage distributions of dividends for the United States portion of your money was 7.7%. Get your arms around that. I'll elaborate in just a moment. The international portion of it was 3.43%. So, a couple things I want you to note before I elaborate. Number one, a distribution of dividends and capital gains are not guaranteed. They can be discontinued at any time. So it's not like a bank CD or anything like that. I cannot give you that impression. But they have been pretty consistent in when they're in being paid to such a large, diverse portfolio that we own as this. But what this means that if you're an investor and had $100,000 in the U.S. equity portion of our portfolio, as quite a number of people do, that means that $7,700 worth of shares were purchased for you on December 30th. And they were purchased at these continued low prices. It was as though you wrote a check for $7,700 of shares. Now, it's important to note further that when these shares are purchased, they do not add to the share price. They add to your number of shares. And then you got a corresponding number. It would have been nearly a little over $3,400 if you had $100,000 in the international portion. What this means, and coupled with what I was talking about in the rebalancing video, is that the vast majority of our clients are going to get to the next updraft in the markets with far more shares than they entered this time. And it's one of the things that gives a boost, literally a tailwind pushing the returns once things finally turn around. And it's really interesting to compare these percentage distributions, these not guaranteed percentage distributions, to the paltry fixed income rates we're all seeing in our banks. 7.7 and 3.43. We're seeing CD rates, even long-term rates, substantially less than this. So I thought this would be helpful to you because there literally is a compensation to us for remaining disciplined in these portfolios. And the only way that the discipline will ever end up paying you is that you hold these shares you were just given until the next updraft, as they will participate in that and add to the return at that time. I thought this might be helpful. If you have any questions at all, by all means, please call. Be happy to get you an answer. Until next time, thanks.